Big supplies and fund long liquidation plagued both the cattle and hog markets in second quarter. What can we expect for third quarter? Tim Petry is here to visit about that. Let's talk about this cattle market. Do you think we've kind of put a short-term bottom in? Can we start working higher?
Yes, I think so. We've taken about, particularly on the feeder cattle side, but you're right, they ran up to over $160 there in April. And, well, you know, the funds were looking for something bullish, and that was the only game in town with corn and so on. Obviously, that's changed now. So, yeah, I think we've found a bottom here. And on the feeder cattle side in particular, we just have to wait and see what corn does. And the opposite relationship there. Change corn 10 cents a bushel, change calf prices $1, opposite direction. So that's the case there. And then on fed cattle that we once thought would be about the same as last year are kind of underperforming on exports a little bit and all the trade issues and so on. So that's affected the distant futures a little too on fed cattle.
But prices are actually above a year ago, aren't they?
Yes, on the fed cattle side, both cows and fed cattle are above last year in spite of record beef production, competing meat production, and slower exports. So, you know, domestic demand is pulling us there. Just about all cuts of meat are the same or above last year, beef, I should say.
The hog market was also plagued here, or has been, by big supplies. The hogs and pigs report was a little bearish, at least for the near term. And so what are you seeing ahead for that market?
Yeah, on the hog market, we're right back to where we started. I mean, we were in the 70s, and that was the expectation for this year, which is a good price, you know, $15 above break even or so. And then ASF hit, and so all the emotion around that took them to over $100 July futures, and now they're back down to 74. So a wild market there. Our exports that maybe we thought would go to China have not materialized at all, and so that's really hurt the market here in the last month.
So do you think if we get a deal, we could see that market really appreciate, or is that the only thing that can turn that market because we're working with the headwind of such big supplies?
Yeah, we got big supplies. You know, we've got 7% more over 180-pound hogs, and we're doing record production every week. And ASF could be a game changer for the entire meat industry, but I think we're probably a year away at least from that now, because China is slaughtering a lot of hogs that, you know, and putting them in cold storage because they know they're going to be worth a lot. In fact, the hog prices in China are double what they are in the U.S.
USMCA getting that ratified would help, though, wouldn't it?
Yeah, absolutely. We're struggling too on Mexico is our best pork customer by far, and they take a lot of things that we don't use as much, particularly take a lot of fresh hams for us, and they've backed off too. But Mexico is ready to do USMCA. Both the president and their legislature there has signed it. So, yeah, that would really, really help us. We get MCA.
We appreciate your analysis, and thanks for coming in. Tim Petry with NDSU.